Elliot, did you have a good day?
I had a great day.
Actually, I don't really care.
Oh,
Your day is not going as well as Elon's.
Yeah, you're probably right.
Tesla's board proposed a $1 trillion pay package to the guy. If he does do it, the company would be worth $8.5 trillion.
Wow, it's incredible. That's like an 8 times increase of their current valuation, right?
Yeah, exactly. Grow your company by the GDP of, Spain. Yeah. $400 billion of adjusted EBITDA is literally insane. No company is even close to that right now. Every time someone says EBITDA, you should just replace that with bullshit earnings. I fucking hate EBITDA.
The adjusted imaginary earnings.
Yeah, and adjusted EBITDA is even worse. From flankinvesting.com, this is Money Grooves, the show for intelligent investors. I'm David.
And I'm Elliot.
In today's episode, we're going to be talking about Elon Musk's insane pay package.
This guy again?
This guy again. Elliot, did you have a good day?
I had a great day.
Actually, I don't really care. Your day is not going as well as Elon's.
Yeah, you're probably right.
In case you missed it, Tesla's board proposed a $1 trillion pay package to the guy.
Sounds like about right.
Yeah, the GDP of more than most countries.
Wow.
And just to show how much $1 trillion is, check out this video.
Have you ever wondered what $1 million would look like in $1 bills? How about $1 billion in ones? That's 1,000 million. Here it is. How about $1 trillion? You know how much that is? It's 1,000,000 million. It's 1,000 billion.
That's right. With $1 trillion, you could make a skyscraper of $1 bills.
Wow, incredible.
It's an unbelievable amount of money.
Yeah.
But the weirdest thing is the way that the board has structured it, it's a complete moonshot that he could actually achieve this.
Sure.
And if he does do it, the company would be worth $8.5 trillion.
Wow, it's incredible. Because that's like an 8 times increase of their current valuation, right?
Yeah, exactly.
Yeah.
So the weirdest thing is, when this goes to vote to the shareholders, I'm going to vote in favor of it.
Okay.
And we'll talk about why. We'll go over the details of the pay package, and we'll go over what it would mean if he were to actually achieve this. What would the stock actually look like at the end of this 10-year period? Because it is a 10-year agreement.
Okay, great. Let's get into it.
From a newly stood up website called VoteTesla.com, we have this proposal that's saying that currently under Elon's leadership, they've created $735 billion worth of value,
Wow.
right? That's over his tenure.
Yeah.
This plan would give him 423 million shares of Tesla stock. It's a 10-year performance period, and another good thing is he's required to hold the shares if he makes it, he's required to hold them for 5 years after he earns them.
So this is not just cash on the table. There's stock, there's other non-cash assets involved in this.
Yeah, absolutely.
Yeah.
And one of my favorite things is he's required to reach his 11th and 12th share tranche. He's required to have a succession plan, which I've read 2 books on Elon, Ashley Vance's and Walter Isaacson's book.
Okay. So you've read both of those books.
Yeah, and anyone who's been following him knows that he's got a little bit of an ego.
No, you don't say.
And so one of the things I'm worried about, we see it at Disney with Bob Iger.
Right.
I'm worried about bad succession planning because
Right.
people with egos can't imagine themselves not being at the helm.
Right. Can't remove themselves from the equation.
Yeah, so he's been a huge blessing for the company, but the same thing that made him great can also be bad. So I love that the board has said, hey, to unlock the last level of this, the last 2 levels of this plan, you're going to have a real succession plan.
Wow, I
out.
love that.
Yeah. And then the award milestones, they covered 12 market capitalization milestones and then 12 operational milestones, and those have to be hit together. And on this site, they didn't show what the actual details. I wanted to know, what are those market cap requirements?
Yeah, I'm surprised.
What are those operational requirements? And they didn't give it. But I was able to find it by going to the SEC's website. So basically, the first one is just a march up in their market capitalization, which I think in our first episode we talked about what market cap was.
And you said you knew the market cap of every company that you've ever bought when you bought them.
Yeah, I don't know the stock price. I really don't follow that, but I know what, because it's like saying, what is a slice of pizza? Well, how big is the slice of pizza? I don't. How many slices are there?
But you know that a pizza, it's round.
Yeah, but if you tell me that you're giving me a 12-inch pizza, I'll know exactly how big it is. That's what market cap is.
Right.
So
I love the analogy.
Yeah. But just as a quick reminder for those who didn't see it, market cap is just your shares outstanding. So how many shares there are, how many pieces of pizza, times the share price. How much does a single slice of pizza cost? So his first one unlocks at a market capitalization of $2 trillion.
Easy.
That's easy.
No
yeah.
problems.
And you actually alluded to it earlier. You knew exactly how much Tesla was worth. If we go into Flank, we can see that right now the market cap as of today is 1.12 trillion.
Yep.
So just to get the first part of his pay package, he has to double the stock price.
Yeah.
Which is pretty insane. And then that continues.
And what's how many years? What's the time frame?
He has 10 years to do it, and he doesn't have to unlock these, one by a certain time.
Yeah.
Just at the end of the 10 years, he has to have all 12 complete. To
So
get it.
in true fashion, wait till the last minute. Do it in the last 6 months.
Yeah, go ahead and
Just procrastinate until the last.
grow
6
your
months.
company by the GDP of Spain. Yeah. So if he hits that $2 trillion tranche, then he would get access to 35 million Tesla shares. And what I really like about this is his only pay package. He's not going to have a base salary, as far as I could tell. There's no other awards, and if there's something under protest right now with his 2018 pay package, and if that gets approved, then it's just going to roll into this, and it'll just be basically like days served.
I have a question for you. The stock will just be awarded at the time when he reaches the milestone at the 10 years, right?
So the way it's structured is if he hits tranche number 1, if Tesla's market cap reached $2 trillion, he still would be missing half because they have to do a market cap and an operational requirement. So that's actually a great segue into what are the operational requirements.
Yeah.
And on the next page of this, they gave us what the requirements are for that. And so his different things he can pick, he just has to pick one of these, but he can either do $50 billion of adjusted EBITDA, $80 billion of adjusted EBITDA, and that goes all the way up to $400 billion, which $400 billion of adjusted EBITDA is literally insane. No company is even close to that right now. And then the more interesting ones are the actual delivery requirements. So you can do 20 million Tesla vehicles delivered. Right now they're around 2 million. So just a cool 10x the amount of vehicles that the company's delivered. 10 million active full self-driving subscriptions. That's 5 times the amount of total Teslas that have been sold so far.
But that's that sweet annual recurring revenue, though.
Yeah, absolutely. Yeah. Yep. And 1 million bots delivered. By bots, they clarify it on the later page. They basically say, what is a bot? And they say it could be the Optimus or it could be any other future thing they develop.
Sure.
And then 1 million robo-taxis in commercial operation. So
Do they operate robo-taxis today?
They do not.
Yeah, right. It's brand new. Yeah.
Yeah, and the idea behind that, and we've covered it in previous videos, but the idea behind what Musk wants to do is he wants to create almost like an Airbnb share ride. Ride share. So I could, I have my Model 3 sitting outside while we're shooting this video. I could just say, all right, go start driving people around, and it would go become a little robo-taxi, and then when I'm ready for it to come pick me up, it'd come pick me up and then take me home.
Pick up trash. Just totally trash inside. We've seen what people do to Airbnbs.
That's true. Yeah.
But a great idea nonetheless. Make some cash while you're sitting here making this podcast.
Yeah, exactly.
Yeah, right.
Yeah. To me, what I really like about this is that Elon Musk has said that his goal for Tesla is to evolve it past an automotive company. Right. That'll be a small component in the future.
Right.
And the future of the company is dependent on full self-driving and robo-taxis, and then their robotics arm, Optimus and all that. And so this is the board saying, no, we're serious about this. This isn't just hot air. This isn't just stock pumping.
It's not just you talking about the things you might want to do in the future.
Yeah, it's actually, hey, this is what you're being goaled against.
Right.
So I'm 2 thumbs up in this requirement because it's so lofty, right? Just like in that, when his first pay package was approved, it seemed like no way someone could do that. You're asking he was basically goaled against make Tesla worth more than all other automotive companies combined. And he did it.
Yeah.
And now it's saying, all right, let's see if you're not just a one-trick pony. Let's see if you can do it twice.
So I have a question for you. If you were in his shoes, which operational goal would you choose?
Oh, God. For my first one, so you have to get a $2 trillion market cap. And those are all, I guess, 50 million in adjusted EBITDA. Because
easy to fudge.
Yeah, exactly. If you put a dime, the first T-shirt we ever made for Flank has a Charlie Munger quote on it that says, "Every time someone says EBITDA, You should just replace that with bullshit earnings. I fucking hate EBITDA.
The adjusted imaginary earnings.
Yeah, and adjusted EBITDA is even worse. So yeah, that's probably the lowest hanging fruit. And like you will never find EBITDA on Flank. You will not find that. So that figure will not be hosted on here. But if we look at what their net income is, or we could even do, I mean, right now they're at like $6 billion, so that means let's see what the adjusted EBITDA is. Yeah, so right now the adjusted EBITDA of Tesla is $12 billion, so that's like a little bit over 4 times the current amount, and so double the stock price. Yeah, I'd probably go up for that $50 billion in adjusted EBITDA as my first one, and then I would go for, the operational ones outside of the EBITDA are really, really nuts.
It really requires a stretch in their offerings, right? Like you got to get people to sign up for self-driving subscriptions.
Yeah.
Make it attractive enough to where people will pay for it.
Yeah.
You got to really lean into robotics. Or you got to develop an entirely new line of business, which is robo-taxis.
Yeah.
Those are steep goals.
It's a tall order, but I like it. He's putting his money where his mouth is. Just to show how crazy this is, a lot of these goals have nothing or very little to do with automotive, right?
Right, or like the core automotive product, right? Like the automobile itself,
selling
besides
cars.
the delivered one.
Yeah.
Right.
And if we look at their revenue today, that's almost where all of their revenue comes from.
Sure.
We can see automotive sales accounted for $15 billion in sales in 2025. And this is just the 3 months ending June 30th. This is a quarterly report. And leasing gave them $435 million. Automotive regulatory credits, $439 million. And then their energy storage was $2.7 billion, and then their services was $3 billion. So, 15 of $22 billion was purely automotive.
That's a big chunk of it.
Yeah.
I'm surprised. This all tracks. The thing that surprises me the most about this is that there's nothing related to energy just generally, right? Being like an energy supplier, because I've heard in the past that, the cars are one thing, but really it's the energy network that Tesla is building, right? They have thousands of charging stations across the nation. That's no small feat. And not to mention that most electric cars use their adapter today. I'm surprised that there's no goal in there that relates to them as an energy provider of sorts. I'm also surprised that there's nothing related to portable fuel. I'm surprised of the software-heavy nature of these goals, of the operational goals.
Yeah. In my original thesis back in 2016, also full disclosure, I am a Tesla shareholder, and I have been since 2016. Part of my thesis was, it's an automotive company.
Right.
It's an energy storage company.
Right.
Because they have commercial, they have the Powerwall, which is, and they have Solar City, which is, their solar panel arm. Then they also have commercial grade energy storage systems. Right. And I thought that, that segment could grow pretty considerably, like backup power at power plants, or, there's a whole host of use for high density storage.
100%.
And the software side of it. That was part of my original thesis, but really the company has played out that it is an automotive company. Yeah. It's a pretty good one. They ship a lot of cars, but.
Right. Yeah, so for me, the most interesting part is just the focus on software. You can build all the robots you want, but if they don't have some sort of software component, they're going to be just big, expensive pieces of metal. And same thing with self-driving cars, right? Like you can build all the self-driving vehicles you want, but if you don't have some software behind them, they're not going to do anything.
Yeah.
You're not going to make any money on them.
Yeah. Speaking of software, you've been studying a business recently, right?
I have been studying a business recently. I've gotten my hands wet into research in Flank, and I've been digging into one of my longest stock holdings, Garmin.
Oh, very cool. Yeah.
Before I get going about Garmin, though, why am I doing this? Well, number one, I'm using the Flank platform as it's meant to be. I'm doing my research, but I've got some cash I want to spend, and I want to make an educated decision. So I thought I would start with something I knew, and I would start with Garmin, and I wanted to talk a little bit about what I've done so far, what I've discovered, and also get your input on whether or not it's a buy. A couple of things before I get going. Like I mentioned, I used to work there. I worked there from 2019 to 2021. It was great. I really have a lot of faith in their products. I have a lot of admiration for the company that was built. It was built from the ground up by two guys who are engineers, and they make really great products. Most people know them for their GPS, but they make kind of class-leading fitness devices. They make class-leading marine devices. We see Garmin all over here when you look at boats, right? It is one of the most well-known names in boat navigation and also in aviation navigation as well. They introduced, during my time there, they introduced their auto land feature. What their promise was that anybody in the aircraft could push a button and that the plane would land itself safely. It would navigate itself to an airport, land itself safely, and it was huge, huge, huge for Garmin and also a great thing for the industry. So ever since then, and ever since my time there, I've had a lot of admiration for them. When I was there, full disclosure, I bought my holdings at an associate stock purchase price, which if any of you out there have the opportunity to do that where you're employed and you're not doing it now, do it. It is one of the best decisions I've ever made. And to this day, they're my best performing investment.
Do they take like 15 points off of the stock price?
They give you a pretty nice discount on the stock, and then you get to keep it for as long as you want.
Yeah. That's I max out the max that I can do at my day job is 10%, and I max that out every year.
Yeah.
You basically you get free money because they take the lowest stock price over the last 3 months, and then they take off some percentage. I've been at companies where it's only been 5%, and I've been at companies where it's at 15%.
Yeah.
And so but either way, I've always maxed it out at 10% because then I just learned to live on a smaller amount of money.
Yeah, exactly. So since then, my stock has performed really well. I've made really great dividends on it. So as I was doing research today, some of the things that stuck out to me were kind of the difference between I was noticing that my other holdings don't give me as many dividends as Garmin does, and I have a sweeps account in my investment account, and it fills up on a pretty regular basis from dividends from my stock. So I was researching today and found that, did some research on Garmin compared to other companies. And what I found is that Garmin really is considered a longer hold stock. It's not as high growth. They're also investing in giving dividends to shareholders as well, which is why, as compared to like my holdings in QQQ, which we'll talk about next week, I'm seeing more dividends from Garmin than I am from investments like QQQ. So
what is their dividend yield?
The dividend yield with my holdings, I get about $40 a quarter, I think, something like that. So that adds up to about $160 to maybe $200 a year.
Yeah, the way to check it is if you go on the overview page, you can see it right on the bottom right, and that's the dividend yield over the last trailing 12 months (TTM) at 1.31%.
Okay.
So that's a good dividend. That's especially for a technology company, especially for a growth company. That's pretty good. Just to give some other examples, if we look at like Coca-Cola is a really famous. They're what's known as a dividend aristocrat, which means that for the last 50 years they've increased the dividend every single year for 50 years.
Sure.
Maybe like 0.01% or something like that during like 2008 or something.
Sure.
But they're paying a 2.92% dividend.
Oh
yield.
wow.
But that is good, especially for a tech company and a growth company.
Sure.
You mentioned their growth, and I took a look as we were chatting, and we look at revenue. I mean, look at this. That's exactly what you want to see.
Crazy revenue growth, and it just the upward trajectory is amazing.
Yeah, the 9-year CAGR, 9-year compounded annual growth rate at around 10%, 5-year at 12%, and the 1 year at 19%. What I love about that, so in the flank methodology, we say we like to see about 10% across the board for those.
Sure.
But even better is if that's accelerating. And what we see right there is that it is accelerating. They are growing quicker, in the last year than they have in the last 5 years and in the last 9 years. So that's a great, great, great sign.
Right.
The net income is also growing at a little bit more. It's not accelerating quite as much, so that's something I would want to investigate. When I looked into it, why you'd expect a 1-to-1 growth rate on those, or even better if their margins are expanding. That's a good sign. But we can see that they've had slight margin expansion over the last year, 2.67% margin expansion, which is very good to see. But those are the things I would start. I would be wanting to understand before I took a position.
Something non-obvious that I found during my research as well was that in the current kind of climate in the current trade climate, Garmin's manufacturing is all based in Taiwan as opposed to China. So they are less subject to some of the tariffs and some of the potential uncertainty about imports and exports because they run their APAC operations entirely out of Taiwan
Oh, nice.
for many of their products.
Yeah.
They're also pretty vertically integrated that they like to do everything top to bottom. Garmin does it all. They do the engineering, they do the manufacturing, they do the design, the marketing. So they're pretty well insulated against outside pressures because they've got a pretty tight ship. They also do all their own distribution as well.
Wow. Yeah, the Taiwan thing, that's a good for near term, but not to get geopolitical on this podcast, but the risk of a Chinese invasion to Taiwan is not zero.
Of course. Yeah.
Which would nuke the stock. But also that could be a good buying opportunity because the technology is not changing. It's not some advanced semiconductor that you could only manufacture in Taiwan.
Sure.
I'm not hoping for a Chinese invasion of Taiwan.
To be clear, we are not hoping for that.
Yeah, not hope that would be a bad conflict.
So, given all of this, I think the question is it a buy or is it a no buy? I'll give my opinion, and then I'm curious to hear what you have to say. For me, looking at all these metrics, especially some of the numbers we talked through, and also looking at the PE ratio, which is 29.38, it's a little bit on the high side, not too high, but a little bit on the high side. And the fact that I've already gotten so much stock at such a low price and had such a good return on it, for me, it's probably going to be a no for the immediate term. The last final thing that made that decision was looking at their stock performance. Looking over the past year, we are at the highest that it's been in the whole year. So even if I was going to buy, I'd probably wait anyway to see what kind of happened there. I'm not inclined to buy when it's at its very highest. So for me right now, it's a no.
Yeah, I don't like buying them the same way. I don't like buying at all-time highs
Yeah.
either. It's just a weird mind thing for me. I don't know if I've ever bought anything at an all-time high.
Yeah.
And then the other thing that I saw, it's both the blessing and the curse, but if we go into their annual report, they have so many business units it's a good thing that they've kind of, they're occupying the space they hold in a lot of these things. But then in some regard, it's like, how do you manage all of those SKUs? How do you manage all of those products?
Sure.
How do you make sure you're bleeding edge on all of them?
Sure.
That would be, I would just need to have a better understanding of that. But yeah, just to look at it. I mean, we have their fitness arm. They break their business into their fitness segment where they have, cycling products, running and multi-sport, watches, scales, Garmin Connect and Garmin Connect Mobile, Connect IQ. They have outdoor adventure watches, InReach, which I used when I was on a motorcycle trip in case I fell and broke my back. It's a great device. Their handheld satellite devices or satellite communicators, golf devices, consumer automotive, sportsman and dog devices, dive devices, aviation, on and on and on. They just have so many things that they're doing. I like to see concentration.
Okay.
And like deliberate, it's almost like when Jobs came back to Apple, right? He took all their products and said, yeah, we're just going to focus on the ones that sell well, everything else. Now, Garmin's trying to play a different game. Like that's kind of what makes them Garmin but that does, I would need to learn more about that. Are they truly dominant in all of those fields? Which I think it's a great brand. It's a great company.
Yeah, same. I've got mad respect for the company and their diversity. You're correct that they do have a lot of products. For me, that's one of the things that I enjoyed the most when I was there. Also, what I enjoy the most about them today, and really the last part of it, the thing that really keeps me invested in them and keeps me liking Garmin a lot is that they make devices that primarily allow people to do the things that they love, right? They're making outdoor devices. They're making aviation, marine, RV. They make RV navigation units. It's things that allow people to do the things that they really want to do and allow them to live like their best life more safely. And I really can get behind that. Like, I really respect that. So, yeah, mad respect for the company. I love their business. I love their products. But for me, it's a pass for the moment.
So, yeah, let's just hope the stock price gets wiped out. And then,
No, we don't want that.
Cool. All right. That's all for this one. Thanks so much for watching. If you want to check out Elliot's first research, you can check it out on flankinvesting.com. You can access it for free. Hope to see you there. And by the way, if all this is confusing and you have no idea what you're doing, we have a course that will show you exactly how to analyze stocks exactly like Warren Buffett. I hope you'll come check it out. It's free. flankinvesting.com. Thanks again for watching. We'll see you in the next one.
Bye, everybody.